Assalamu alaikum wa rahmatullahi wa barakatuh. Alhamdulillahi rabbil alameen wa salatu wa salamu ala Muhammadin Sayyidil Mursaleen wa ala alihi ajma'in. Hope my sound is clear and you can hear me properly. So inshallah we will start in a couple of minutes inshallah. Just a couple of minutes, we will wait for if someone is trying to join us, and then we will start inshallah. Okay, I think we can start. Assalamu alaikum wa rahmatullahi wa barakatuh. Thank you everyone for joining us back again for back-to-back basics educational series by Ethis. We try to explain and discuss the very basics of Islamic finance in this series, inshallah. And maybe in the next series, we will try to dig more deeper. Okay, so before I go through this slide, I think let me go through the other one. Yes, just last week, just give me 1 second. Last week we had a bit remainder of the last slide, so I'm just trying to get back to that. I think this one most probably. Okay, so if you recall, we were discussing about prohibited elements. Basically, if you recall, we mentioned that the basic prohibitions in Sharia are basically riba, then gharar, maisir, and some non-permissible haram goods or services. So I will go through the remainder very quickly, inshallah, so that we can go to the topic for today. So we discussed riba in detail. I will not go there. We discussed the stages or gradual prohibition of riba, then riba prohibition in hadith, the types of riba, the conditions of riba al-fadl, and then we started gharar. So we discussed that gharar basically is an uncertainty or ambiguity, keeping very primary or important conditions of the contract ambiguous, clauses ambiguous, because of which it can lead to deceit, fraud, moral hazard, or something like that, or some extreme uncertainty or lack of transparency in a contract for clauses which needs to be transparent or which needs to be properly disclosed. So in general, this is gharar. Now, gharar can happen in many ways, especially in it can be in it has to be like 4 conditions. It has to be an exchange-based contract, contract that there is something in exchange. For example, sales. There is ijara or lease-based contracts, musharaka or mudaraba partnership contracts. So in contracts that are there is some sort of things in exchange. This is where gharar happens or gharar is counted. Then things that are excessive in degree, meaning the gharar is quite excessive and it relates to the primary object or subject matter of the contract. This is also relevant to the discussion we will have today, inshallah. And finally, it's not justified by a Sharia recognizable necessity. So in some cases, there could be a necessity because of which the uncertainty is there, but it's not the case. So in those cases, gharar is problematic and it may lead to make the contract void or voidable. We will have this today, inshallah. So this slide, it included some of the types of gharar. For example, we had gharar in the form of contract. Now, gharar in the form of contract, for example, conditioning one sale or one contract with the other. This is prohibited, and there is explicit hadith by Prophet sallallahu alaihi wasallam. Then having a contract which is contingent upon a future event. So because the future event is an uncertain thing, hence the contract is also becomes uncertain and is a gharar. Then contract effective in a future date. We will go through today, we will see that one of the condition of the form of contract is to have it right now. So we cannot have it on future. Yes, there is exception for forward lease, but not for sales contracts. Because of that, forward and futures, especially where both counter values are differed, there is excessive gharar, uncertainty, and this is why it's also problematic from Sharia point of view. Now, back to basic, like why gharar is problematic. When we look at the principles or objectives or of fiqh al-mu'amalat, the fiqh, the ruling or jurisprudence of exchanges in Sharia, one of the basic principle is taradi, or satisfaction between the parties, mutual satisfaction. Allah subhanahu wa ta'ala in the Quran Kareem mentioned, Ya ayyuhalladhina amanu la ta'kulu amwalakum bainakum bil batil illa an takuna tijaratan an taradin minkum. O believers, do not eat amwal or wealth of each other by batil, by means that are not proper, improper means. However, you can eat tijaratan through trade, an taradin minkum, through mutual satisfaction between yourself. So that satisfaction is absent when there is a gharar, when there is a very crucial information not properly disclosed, or things are kept uncertain, which may or may not lead to a proper sale. So these are the things because of which the satisfaction becomes absent. Disputes arise. And this is what fiqh al-mu'amalat in Islam or Sharia, the jurisprudence of financial transactions, this jurisprudence wants to ensure that there is trade and there is exchange contracts between the parties with satisfaction. So both parties feel that, okay, we know what we are doing, and we are satisfied with that. Satisfied in the sense that we are informed properly before we take the decision, so that there is no room for fraud, no room for deceit. So we can see this from consumer rights point of view as well. When things are not properly disclosed, this is where consumer rights are infringed, and this is what Sharia want to, stop in principle. So okay, and then this gharar can be in the form of in the subject matter. Today also we will have a discussion on the subject matter because of many reasons. We will also discuss that. So I will skip now. It can also happen in the delivery of the subject matter. So for example, if it's a sale of debt, it's a sale of expected future cash flow, it's a property illegally possessed by a third party. In all those cases, the delivery becomes uncertain. And because the delivery becomes uncertain, again, the disputes may arise and the satisfaction may not be there. So the things, whenever we keep things uncertain in the contract, this is why Sharia will come in, and Sharia will say, no, stop. Make things proper, 100% clear and certain between the parties, so that you know what you're doing. Now, when we will discuss, inshallah, in the equity contracts, we cannot, make certain the amount of profit that one can give. Yes, we can make certain the profit sharing ratio, but we cannot make certain the lump sum. That is not the objective of gharar, eliminating gharar, no. Because with that, if we make a certain profit, amount of profit in terms of lump sum, then it triggers another issue, which is riba. Because immediately the amount becomes, instead of equity, it becomes a loan, and then any profit earned from that becomes a riba or interest. So that's a different thing. We cannot make that point of certainty. That is not what certainty means. Certainty means in the variables or in the subject matters of the contract. All right. So in the terms of contract, for example, payment, the price is not specified. This is gharar. Then period of payment is not specified. This is also gharar. We will discuss today also. These topics will also overlap today, inshallah. So this gharar is one of the things. Then we have maisir. Maisir or qimar, the words are usually often used interchangeably. Basically, Maisir refers to some easily available wealth or acquisition of wealth by chance, whether or not it deprives others' rights. However, whereby Qimar is a zero-sum game where someone wins at the cost of the loss of others. Now, the objective is acquisition of wealth through deliberate risk taking, and it's a form of gharar as well, because the gambler, the one who is participating in it, is unaware of the result, unaware of the outcome. And Allah Subhanahu wa Taala in Surah Al-Ma'idah, He mentioned that the gambling and intoxicants, etc., are prohibited. So because of that, I mean, some of the examples of gambling could be, or maisir could be, for example, lottery, betting. Those things are prohibited by Sharia. Again, because of the uncertainties and excessive uncertainty, speculations involved. Then the last one, in terms of Sharia prohibitions, is basically impermissible or haram goods and services. So in Sharia, we have some specific things that Allah Subhanahu wa Taala or His Prophet Sallallahu Alaihi Wasallam have guided us, mentioned that those things as prohibited, and those things we cannot deal with. So, for example, non-halal foods. So there are pork or non-slaughtered animals, or animals which are not slaughtered according to Islamic principles, dead animals, right? So those things. Then intoxicating drinks, wines, intoxicating alcohol, for example, or other drinks that intoxicates, non-halal entertainment, pornography, tobacco-related products, conventional financial services because they include riba. And there are such other categories, especially when it comes to business screening of equity screening. The indices or international exchanges, they disclose those categories, and basically they are based on the principles of Sharia. So those things we have to avoid in all cases. Those cannot be the subject matter or the price of the contract that we are, or it cannot be in any way exchanged. Any earning derived from those would be deemed haram. So as a Muslim, we have to be careful about those. Okay, so now let's go to last topic of the last session, which we couldn't finish the other day. Is basically one more concept. So we discussed the fundamental differences between the conventional finance, specifically capitalism and socialism, and then Islamic finance. We also discussed the ethical values. We discussed the basic Sharia prohibitions, including riba, gharar, maisir, qimar, and then Sharia prohibited goods and services. And lastly, one more concept I wanted to discuss is basically the maqasid Sharia, or the objectives of Sharia. I'm sure many of you have heard about it, but those who it is very new, I just wanted to introduce that. So basically, Allah Subhanahu wa Taala or His Prophet Sallallahu Alaihi Wasallam, in other words, Sharia has given us many ruling to do this, do that, or introduce many punishments, for example, because of these, that. So for those, I mean, why those punishments were introduced? Why those rulings were given? The ulama, the scholars have basically summarized into 5 core objectives of all those rulings and punishments, etc. The first one is basically hifzul iman, meaning the protection of one's belief, or in other words, religion, which is basically the vision of the well-being of a human being. Then hifzul nafs, the protection of self or the life, or in other words, the human life, which is basically us, the central goal of all the other visions. Then the protection of mind, hifzul aql, because that's what makes us unique from other animals. Then hifzul nasl, or protection of progeny. And because of this, we will see that Sharia has implemented, or Sharia has given us such capital punishments for zina, for adultery, for haram relationships, this and that. Why? Because so that the progeny is protected properly. And finally, hifzul mal, wealth, protection of wealth. So that's why we'll see there is a very harsh punishment for someone who is a thief, right? So there are capital punishment for that, and there are other such punishments are introduced, and also there are other rulings related to that. So in other words, the Sharia would be in general trying to achieve those 5 objectives, if we go deeper into this, they all align, or we will see that there is a good harmony between the SDG, the Sustainable Development Goal published by United Nations, and all ethical values that we usually are being talked about. We will see that the core maqasid or objectives of Sharia will align with those. So anyway, we will jump to the discussion that or the topic that we wanted to introduce today. Uh, Let me open that slide. Just 1 second, inshallah. Yeah, this is here. So today we wanted to introduce the contracts, the basics of the contracts, or in other words, Islamic law of contract. Now, the basic elements of a valid contract. Now, first question: why we need to understand Islamic law of contract? So we know we learn about a lot of contracts or products. For example, murabaha, ijara, mudaraba, musharaka. But why the rulings of, for example, a sale contract is such like that? Why a ruling of ijara contract is like that? Why a mudaraba is like that? Why is a musharaka is like that? What are the wisdoms or the algorithms or variables behind those rulings and requirements? This is where we need to understand very basics of a valid contract or Islamic law of contract. So inshallah, I will be very brief, but I will try to give you a very basic understanding of the law of contract in Sharia. So in this slide, as you see, there are basically three core elements of a valid contract. First one is the form, the offer and acceptance, meaning the one party will offer the other party and the other party will accept. So this is basically offer and acceptance, which we call aqd, or a contract or an agreement. Number two is the subject matter. Subject matter is basically the main object or subject for which the contract is. Let's say I want to buy a vehicle, automobile. Now, why we want to do the contract? To purchase that automobile or that car or that vehicle. So that car is basically the subject matter of the contract. So the main component of the contract for which the contract is existent is the subject matter. Now, in some cases, the price is also a commodity, so that could be also treated like a subject matter. But in general, a price could be a cash or currency, so it also would have some basic requirements which we will be discussing, inshallah. And finally, the contractual parties, the two parties, in Arabic we call aqidan. So they have also some basic conditions which we will be discussing, inshallah. So those are the three core components of a valid contract. Now, for offer and acceptance, those are the requirements. It has to be clear, right? It has to be unambiguous and unconditional. So I'm offering to sell my car, right? Which car? If I'm having 10 cars, this is the car. This is the car. This has to be clear, and the offer has to be clear. Like I want to sell, I want to buy. The expression has to be clear, unambiguous, and unconditional. It shouldn't be like, okay, I want to sell my car if today there is a rain, for example. No, it wouldn't work. It has to be unconditional. Number two is confirmation. Sorry, it is written confirmation. It's not confirmation. It is confirmation of offer and acceptance. Basically, the offer and acceptance has to conform. So if the seller is offering, I want to sell this mobile, and the buyer is saying, okay, I'm purchasing, I agree to purchase this car. So the seller is offering a mobile and the purchaser is offering, accepting something else. It is not conforming. So it will not immediately conclude as a contract. Rather, the buyer saying that I am buying this one is constituted as a new offer to the seller. Now the seller has to accept that. Basically, the offer and acceptance, the acceptance needs to be in conformation with the offer. Now, who will offer and who accepts? It can be anyone. The buyer can offer or the seller can offer. The buyer can say, I want to buy. The seller can say, I want to sell, or I sell, I'm selling that. It's fine. Then connection of acceptance with offer, almost similar thing that I mentioned, but on top of this, the connection would also mean the majlisul aqd, the session, Like I am saying today, okay, I want to sell my mobile, and someone comes 1 month later and say, okay, you said on 1 month before you offered to sell your mobile. Now after 1 month, I'm accepting it. No, the connection hasn't established. The network is disconnected. So it has to be properly connected. How will it connect? Traditionally, the scholars said, because they wouldn't, at that time, they couldn't imagine of a virtual session like, so they said, okay, the physical session, whenever there is a physical, the physical session of the offer, the acceptance should be in the same physical session as well. So if the other party, let's say one party, the seller said, okay, I'm offering my property to be sold at this price, and the buyer takes time, is still fine. But let's say at some point of time, he walks away. So the traditional scholars considered this as the session has concluded. The session of the contract or the session of the offer and acceptance has concluded, meaning that, what it means? Meaning that, let's say now he comes back and says, okay, you made this offer, I want to accept. It wouldn't be binding on the offerer. It wouldn't be binding because the offer session has concluded. So now it will be considered as a new offer, and then the other person has to accept in that session. Now today we have virtual sessions. We have remote sessions. We have sessions through email, through WhatsApp, through, uh, there are many now different forms, right? So now the sessions could be, the Sharia scholars, they mentioned the sessions could be considered in various ways. Basically, it is kept open to the urf, to the customary practices. Now, in some cases, it could be like whenever you receive email, that's the session. You have to either accept or reject. You have to reply. Or in some cases, it would be binded by a duration. Let's say you have to accept this offer within 3 days, within the end of the month of March, for example. So then the offer would be extended until the end of that period. What does it mean? It means that if within that period the other party accepts, then the offerer is binding. I mean, it is binding upon him to deliver the product or deliver what he is offering for. I mean, he cannot just reject. But before the other party accepts, he can reject. After the other party accepts within the session, before he rejects, he cannot reject anymore. All right, so it can be verbal, it can be by gesture. Sometimes it happens just gesture. We just go to the grocery shop, we take maybe a packet of bread or eggs or whatever, and we pay. We don't even use our verbs. We don't even write something. So we just take, we pay the price that is known. So it's fine as well. Now, the crucial part, the most important part is the subject matter. Now, let's say I give an example of selling a mobile, for example, or a car, for example. So what are the conditions we have to fulfill in a general sale contract? Number one, it has to be existent, meaning that it is not that it is not, it is unexistent. Now, why it needs to be existent? So that it can be delivered. Why it needs to be something that can be delivered? So that the other party doesn't need to be in a dispute, so that the mutual satisfaction is there, as I mentioned previously. If the thing is product is not existent, then there is a room for dispute. Now, there are contracts we will discuss inshallah in brief. There are contracts, for example, salam, for example, istisna, which are forward contracts. In a salam contract, what happens is that the buyer pays 100% price in advance, and the seller delivers the commodity after a certain time. So that is also permitted by Sharia. However, there are some additional conditions. All right, we will discuss when we discuss about in detail in salams, for salam. Then istisna is a manufacturing contract. We order something. We order something to be manufactured, to be constructed, and it is not existent when we order it. Sharia also permitted that with due considerations, with relevant conditions. So there are exceptions with additional conditions. If you go that way, then we have to fulfill the additional requirements. But in general, this is a general requirement for a subject matter, that it has to be existent when the contract is made. It has to be legitimate. It has to be suitable. Now, meaning of legitimate, meaning legitimate by Sharia. It's not forbidden. So it cannot be pork, it cannot be wine, it cannot be intoxicating drinks, for example. And it has to be considered a property of value. What does it mean? It means that between the parties, it is considered something that it has a value. Why Sharia scholars have discussed this condition? Because if it doesn't have any value, then the sale contract would be basically a leeway for riba based contract. Let's say I want to borrow from you 100 ringgit so that I can repay 110 ringgit. But since we know that loan with interest is haram, so we say, okay, let's do this. We have some grass in our field. That grass is basically, we just take some of the grass. That is the commodity. So I sell you with 100 ringgit, and you sell me back at 110 ringgit or something like that. So if the thing is, if the commodity is of no proper value, this is where it opens leeway for riba contracts. So that's why, of course, there are gharar and everything else. So that's why Sharia has prohibited that. Then third requirement is it has to be owned and possessed by the seller. Why is this requirement? Again, so that he is able to deliver. If he doesn't own the product, right? If he doesn't possess the product, maybe he cannot deliver. There is a higher chance that he will not be able to deliver. And this happens every now and then. This happens even in the forward or construction contracts as well. And that's why, as I mentioned, for Salam, there are additional requirements. For example, in Salam, we cannot do for products which are not available in market. It cannot be done for unique products which are customly created. We cannot do Salam for that because there is a high chance that he will not be able to deliver. If he doesn't, he's not able to deliver in a Salam contract, the seller has to purchase from the market and then deliver to the buyer. Anyway, that is for Salam, but in general, it has to be owned and possessed. Now, possession could be actual physical possession. It can be constructive possession. What we mean, actual possession is understood that I have physical possession of the product. Constructive possession is basically having the ownership licenses or maybe the documents, etc., and the seller taking away all barrier of delivering the product. What it means that I, as a buyer, can just go and pick up my product. I have that documents, I have that all the necessary things that are required to go and pick up my product. That would be considered as a constructive possession. Few examples could be, for example, if I have a check, someone is paying me by check, and I know that I can go to the bank and when I deposit it, I will get the money credited to my bank account. So this is considered as a form of constructive possession. Fourth condition is it has to be known to both parties. Again, to remove uncertainty, to remove gharar. Now, how it can be made known, either by viewing the product itself. So for example, if we go to a car showroom, we point this car, we know that this is the car we are purchasing. Okay, this is known. Or maybe by seeing the sample. So we are going to purchase maybe thousands of quantities, but we look at one sample, we see it properly, and we know this is the product we are going to get. So these are one way of specifying. Or we can specify by description, type, quality, quantity, model, and make, etc. In principle, like any information that are crucial, that are important for the decision-making process of the buyer. So if you go to the e-commerce websites, for example, today, so initially they would only put maybe one picture, right? Maybe some description. Now we can see more and more transparency are coming. So they would put the dimension, the weight, even if it's a cloth, then the fabric, the sizes. Then they will also have additional pictures, 360-degree pictures, 3D models, videos. So these are all ways to specify the product. If it's a price, if it's a currency, meaning the price, then the price has to be specified in terms of currency, which currency the person has to pay, what payment method it would be, right? And then if there is any fees involved, if there is any foreign currency exchange depreciation is involved or something is involved, and who will bear that. So those things need to be specified. But in general, the buyer has the responsibility to pay the price. So any fee or anything he has to, he will go through, in general, buyer will pay. Seller has to deliver the product. And in general, any fees or any cost it will be involved, he has to pay, or he has to bear. However, both parties can agree on something different. For example, in e-commerce websites, we agree that okay, I as a buyer will take the delivery fee. It is fine. Or maybe the payer, when he pays the price, the merchant is giving a commission to the bank, meaning the merchant is not getting 100%. He's getting maybe minus 2.5% or minus 3-4%. So that is fine as long as both parties agree. It's fine. Now, the some prohibited items include, which I already discussed, like in the other slide or at last slide, which are pork, alcohol, blood, materials, etc. So these are the basic conditions of a subject matter of a contract. Then for contracting parties, basically the basic condition they have to have is basically the capacity to execute the contract. Now, how will we translate capacity? The capacity is translated into sanity. For example, he's sane, he's good in his mind, he's adult, or he's matured. So adult meaning in terms of age, he has gone to the age of puberty, or maybe he hasn't gone through that age, but he's matured. Matured in the sense that he can decide for the best of for his best self. So that is also fine, and he's not under any duress or under any state of intoxication, because when he is under duress or in state of intoxication, again the taradi, remember I mentioned, the mutual satisfaction component is missing. So this is why Sharia requires that the contractual parties are both insane and condition which indicates that they have the capacity to execute that contract. Now the categories of contracts. So there are basically two types of contracts, basically, fundamentally. One is sahih or valid. Valid contracts mean that all the elements and conditions that we have mentioned in terms of subject matter, in terms of price, those are valid, and offer and acceptance, all okay. And batil or void is when they don't comply with the basic elements or core components of the contract, or something is missing, or maybe it contains a prohibited attribute by Sharia. For example, for example, someone is selling pork, for example, so it will be a batil contract. So the attributes of a batil contract is that it is illegal, so we have to immediately void it. No ownership will be transferred. So if someone is selling some prohibited items and then he says, okay, I already transferred the ownership, it will still be considered that it hasn't been happened, and it cannot be ratified, and no need to return the goods if already delivered, because the contract is void. Now there is another category which is fasid or voidable, which is basically mentioned by Fiqh Hanafi and some scholars, which is in the core elements are fine, but there are some additional external elements because of which it became problematic. For example, a loan contract. A loan contract is fine, but an interest component has been conditioned. So this is a fasid or voidable. What it means is that if you remove the interest part, the contract becomes sahih. If you don't remove it, then it will become batil. So it's like in between. You have still chance to ratify it, to rectify it. So that's the fasid category. Now in this slide, we have a summary of the different contracts that we have in Islamic finance. So we have sale-based contracts. For example, general sales. We have murabaha. We have, for example, we have murabaha. We have BBA, salam. Sorry. Yeah, we have salam, istisna. BBA is put twice. I'm sorry for that. Then we have istijrar. We have bil wafa. Then tawarruq. Then in profit sharing principles, we have mudaraba, musharaka. In lease-based principles, we have ijara. Fee-based principles, we have wakala, juala, and there are free of charge contracts as well. For example, qad hasan, and some supporting contracts as well. For example, kafala, rahan. They are basically security contracts or supporting contracts, and even hiwala. So those are the overall picture of the contracts that we have in Islamic finance. As you know that we cannot do riba, right? We cannot lend lend people money or borrow from someone money and pay or receive interest. So since that is the core function of a conventional financial institution, so an Islamic financial institution by default cannot do that. So what would it do? It would look for the purpose of the funding or the financing. So if someone needs, for example, to purchase a car, then maybe there will be a sale agreement. Maybe there will be a ijara agreement. If someone needs to purchase a house, there will be a maybe diminishing musharaka agreement. If someone maybe wants to install a machinery, it can be an ijara contract as well, a leasing, financial leasing, for example. So the contracts will differ from time to time, from case to case, based on the purpose of the financing required. So this is a unique beauty, and we mentioned in the very beginning last session as well, that one of the features of Islamic finance is that it's very real economy based. So we never have money for money. We will always have some asset. Either it's a sale of an asset, purchase of an asset, rental of an asset, or maybe even a partnership in some real economic activities, which is basically under the profit sharing principles, right? We will always have some real economic thing. It will be always attached and linked to a real economy based asset or activity. Now for today, we will discuss in brief a Murabaha contract, because this is one of the contract that is highly used in many countries, especially for Islamic financial institutions. So the first thing is, what is Murabaha? Murabaha is basically, firstly, it's a sale contract. What is a sale contract? A sale contract is basically an exchange contract whereby a commodity is exchanged with a price, or sometimes even a commodity exchange with another commodity. Now, what is different or unique in Murabaha is basically Murabaha is a type of sale of amana, of trust. What it means is that in Sharia, there are there are sales of bay'ul amana, meaning sales based on trust. Sometimes, for whatever reason, we have to disclose the purchase price, the cost, the profit to the other party. Maybe because we want to build more trust-based relationship with the other party. Maybe because the other party is not so sound in understanding how much he is profiting, or how, if he is even losing something. So for whatever reason, there are sometimes reason to disclose, and Murabaha is one of such contracts. Now the specific feature of Murabaha is that Murabaha is a sale with profit. So because it's a bayul amana, there will be a disclosure of the cost and also disclosure of how much markup or profit has been made in the sales contract. So I sell something to you, or A sells something to B. A will disclose to B that this is the purchase price I had, and this is the or this is the cost price, which is purchase price plus delivery fee plus blah blah blah, and this is the amount that I'm selling to you with this markup. That's Murabaha. Now, is it a very good contract, or is it something like very ideal? Not necessarily. But why it was introduced to financial institutions? Because we wanted to replace riba contract with a sale contract or a real economy based contract. And because it is through financial institutions, we wanted to bring transparency. And because in Murabaha, there is a transparency in cost and profit, that deemed more suitable to the Sharia scholars during that time. And Alhamdulillah, that's how we started Murabaha. Now, if you see the definition by IOFI, it's a selling of commodity as per the purchasing price with a defined and agreed profit markup. So the seller discloses the cost and profit, and the markup could be in terms of lump sum. It could be in terms of percentage of the purchase price as well. Okay, and then it can be concluded without a promise or with a promise. So what is the difference? Let me go to the next slide. So let's see, this is an ordinary Murabaha. This is a very classical Murabaha where we see three parties. So basically there are three transactions, two agreements, or two transactions. The first transaction is that the first seller he is selling the product to this person who is the first buyer, and he is basically the seller to the second sell and purchase agreement. After he purchases, he pays the person with cash. So this is basically indicating the cash movement. And once he acquires, owns, and possesses the product, he sells to the other party or the second buyer and gets the amount paid. So this is basically a very classical murabaha, whereby if we consider this as murabaha, then he will disclose the cost and profit. If we consider this also murabaha, then he will also disclose the cost and profit. But it may also happen that he is actually buying in a general sale or buy mutlaq, and then he is selling to this party with cost and profit, which is murabaha. But this is basically ordinary murabaha. Now, in a banking murabaha, what happens? You can think of the same flow, but replace this first seller or second seller or the first buyer as a bank. So let's say this person wants to buy a car. He will go to the bank. He will say, okay, I want to buy this car from this vendor, and bank will basically purchase this product or this motor vehicle from the company and pay the cash directly to the company, and then sell to the customer. And the customer will pay, usually in murabaha, they do murabaha muajjala, meaning deferred payment murabaha. So the customer will basically pay in installment. But we have to remember that deferred payment is not a condition of murabaha. Murabaha is just a sale where the purchase and cost and profit is disclosed. But it may be with deferred price, it may be in spot price. However, in banks, usually we practice deferred price murabaha. Now, this was a simple one, but if we look at a bit complex one, usually the original one was that bank would directly purchase it, and then after it purchases, it would sell to the customer. But because banks sometimes doesn't have that capacity, and because the customer is on his domain would be more suitable to understand and recognize the product, usually hence for the flow is a bit different. So in the first flow, we'll see that there is a master murabaha agreement between the bank and the customer. This master murabaha agreement would also include a promise, for example, that okay, if you buy this vehicle from that company or with this model and that, I will buy from you. This promise the customer will give. And then based on that promise, the bank will purchase from the motor vehicle company. Now, how it will do, it will first, in number 2, it will first make the customer as an agent. Then customer as an agent will be acquiring or possessing the asset or the product or the commodity from the vendor itself, from the company or from the supplier. And bank will pay the cash directly to the vendor as a purchaser. So in number 5, you see, this is basically the bank customer is informing the bank that he has possessed on behalf of the bank. In other words, it is basically handing over to the bank. He is basically handing over to the bank the possession of the asset. So in after number 5, the bank has the ownership and the possession of the product. Now bank will have another agreement, which is this one is basically the murabaha agreement. So bank will do a murabaha agreement, and offer and acceptance will happen with the customer, and then customer will pay in installment or whatever payment terms he has with the bank in terms of murabaha agreement. So we have to remember one thing here is that the customer being an agent of the bank, this is not what is recommended in general circumstances. Though the sad reality is this is what widely practiced in globally. The best scenario is that bank directly purchases it, possesses it, or maybe bank makes someone else as an agent. Now we always hear from the bankers that this is a challenge, but this is also, I mean, we can also have third parties, just like, for example, e-commerce platforms. They have third parties who just do the deliveries, right? Deliveries of the product. So similarly, banks could have third parties, and those third party companies could work as murabaha agents, as ijara agents of several banks. So this could be a separate business model and would be much more Sharia compliant. Now, because customer is being the agent, often in many countries we have seen that what happens is in operational sequence, there are Sharia violations. For example, maybe the customer is just, after this, the customer is directly possessing it without any murabaha agreement, or maybe the cash is going directly to the customer's account and customer even do not purchase it. So in many ways, there are Sharia violations. The best way to do is that the bank directly makes someone an agent, not the customer himself, so that there are no or less Sharia violations. Now, quickly, there are some Sharia issues. Inshallah, after this, we will take into the questions. Number one is buyback arrangement. So if in this same murabaha, if it is structured in a way that, okay, bank sells to the customer, then the customer sells back to the bank, this is a buyback arrangement. And this makes it bay'ul aina, which is considered prohibited by majority of Sharia scholars. Prior contractual relationship. So let's say, for example, the customer has already acquired the motor vehicle from the motor vehicle company, meaning that he already has an agreement with the company to purchase that. Now, maybe he also made he signed the agreement and also signed he made a down payment. Now, because he is unable to pay, he came to the Islamic bank. Okay, I need financing for that. Now, can Islamic bank finance that? Cannot, because the product is already sold and it is already owned by the customer. Now, if we consider that for this same product, there is a murabaha, then it will be basically a buyback, because the customer has to sell to the bank, then purchase back from the bank. And then it becomes the buyback that we have just discussed about. So there shouldn't be any prior contractual relationship. Rollover, for example, the customer has already purchased the same car as a murabaha, and he is unable to pay in due time. So the same murabaha is basically extended in terms of time, or maybe another murabaha is structured on the same product. So in both cases, if there is a penalty being charged for extension of time, that becomes riba. If the same product is again made a subject matter of another murabaha, then again it's not valid, because it's a sale agreement and the purchase product is already sold. We cannot redo or undo and then redo the sale. It's not possible. Then rebate on early payments, highly disputed by most Sharia scholars. Just like we cannot charge a penalty because of late payments, we cannot also contractually give rebate for early payments. Yes, if customer pays early and without any prior contractual agreement, the bank at its own discretion gives rebate, that is a different thing. But whenever we are making it a contractual clause, this is where it becomes akin to riba. And then finally, no penalty or interest can be charged, because if there is a penalty or interest is charged because of default or late payments, it becomes interest. Now, it has to be disbursed to the charity because it's a non-halal income for the bank. And one more concern, basically, it's usually discussed, is that for murabaha pricing or any such pricing like ijara pricing, usually the banks or financial institutions would have a benchmark for the pricing. And the benchmark is basically the interest rate benchmark. Now, it's a pity that we don't have well-recognized Islamic finance benchmark. Alhamdulillah, there are initiatives to make that, but not so well recognized. There are some sound initiatives as well. Inshallah, we'll have it soon. But until then, if someone prices against the interest rate benchmark and fixes the amount, the point is the price has to be fixed. It has to be specified. It cannot be variable like this. If it is not variable and it is specified, but when specifying, it was benchmarked to a rate of interest, just because of this, it will not become a haram issue. Haram or prohibition will come when the interest is a component of the contract, not just benchmarking it to a rate. It doesn't make it haram. So may Allah subhanahu wa ta'ala save us from these any prohibitions. With that, we conclude the session today. Inshallah, we'll take Q&A. We wanted to discuss today both sale and lease, but when I was preparing, I found that it will be too heavy for a session. But just to give a glimpse, that if you recall, we have mentioned for the contract few things, right? So in Sharia, ijara is also similar to sale contract in the sense that in ijara, we sell usufruct, benefit, utility, services. It's a sale, but it is the commodity or the subject matter is different. So the fundamental things are still there. It has to be specified. Like if it's a usufruct or utility of a product, then or asset, let's say utility of a car, then what make it is, what model it is, it has to be specified. The duration has to be specified. Uh, if there is a quality or quantity object, then it has to be specified. If it's a service contract, let's say employment contract, then what would the employee would be doing? It has to be specified. What are the remuneration model? It has to be specified. So the main conditions that we discussed today will still be there. However, because the nature of the subject matter is a bit different, it's a use of product or it's a utility, it's a services. So the practical implication or application of the conditions will change. Otherwise, the principal conditions still remain. So hopefully that will give you the very basic understanding of Ijara as well. And with that, we conclude the session today. I will have some Q&As, inshallah. Okay, let's go to the Q&A. Is buying health insurance non-permissible? Okay, it's a good question. For countries where we find Islamic health insurance or Islamic takaful based insurance, definitely we should get that. If it's a conventional insurance, it has gharar and such other elements. But if it is mandatory, the Sharia scholars have given permission for that because it's mandatory by the regulators. So that's a different case. Will the slides be shared with participants? Inshallah, definitely. We have shared the slides of the last week as well. This week also it will be shared. How does khiyar aib work in a sale contract? Okay, khiyar aib basically is an option of defect. So let's say I as a buyer, I saw a sample, okay? Or maybe I saw the product itself. I saw the commodity on the exterior and everything. It seemed to fine. Then I came back at home and I found that there is a defect, right? And that defect is something which decreases the price. So the defect could be something that doesn't decrease the price, the value, and it can be something that decreases the value. And now, if it decreases the value, then we have to see. Okay, we have two options. Either, I mean, firstly, sorry, we have to just stay with that, or we can return to the seller to change it, to send another product. If it doesn't change, then we can file a dispute. We can demand for the full money return. Now, if the defected product comes to my house and delivered, and I start using it, and now there is another defect, which is because of my own effort, right? Or maybe it's the nature of the product is something which I can also put my effort, and the effort cannot be segregated. For example, I purchase a cloth, open cloth, and I sew it. Or maybe I make something out of it. So it became a structure, or it became something which I cannot return as it is, as it was received by me. So in such cases, the defect, the person can receive some compensation from the seller. Now, how the compensation will be calculated, the scholars have detailed in their the fiqh books. In general, basically the difference between the product with the defect and the product without the defect. So we'll have to see what is the value with the defect, what is the value without the defect. So a bit of valuation comes into the picture, and it can be based on mutual negotiation, or it can be based on a third party valuation. All can work. But end of the day, when it is not possible to return the product, the only way we can is we can demand the compensation for the defect. That's the ruling of khiyar al-aib, or option of defect. Okay, in banking murabaha, when the customer being the agent and do the point 5 inform the bank, the object ownership will be belong to bank. When the point 6 happen, offer an acceptance, where is the object? In customer house, what if the object destroy in the customer house before the point 6 happened? Shukran. It's a good question. And this is why I mentioned that when the customer is the agent, there are a lot of operational risk, Sharia risk related to operation happens. And one of these is this, that maybe the product is destroyed before it is delivered to the bank, or maybe it's already in the customer's house. So usually, I mean, traditionally or ideally, what would be best is that the bank takes the physical delivery or the possession of it, right? Physical delivery is of course the ideal, most ideal. In case it is not possible, it's still constructive possession or constructive delivery. Now, because the customer himself is an agent, it is difficult to say, okay, at 10 a.m., the customer was possessing it on behalf of the bank. And at 10:05 a.m., he is possessing on behalf of himself. So because of that, there are differences of opinion among Sharia scholars. And the best way is at least to have some time, maybe 15 minutes, 1 hour, whichever is practical, leaving it to the risk of the bank. I mean, in a state that now we can see if it is damaged within that time period, it will be considered that the bank, it is damaged under the risk of the bank. The bank will be liable for the value. If we don't do that, that the transfer of risk is not happening. And without the transfer of risk, meaning that if from the entire flow that the risk is on the customer, this is where the problem happens. And among Sharia scholars, many would consider that the flow didn't happen properly, and it's more like a ribawi contract. So and then if the next question, as you asked, like uh, when the offer and acceptance happen, where is the product? It's a very valid question. So the best is that it still is in the factory or the warehouse, and then it is left to the bank's risk until sometime, as I mentioned, some time elapses, and then it is further delivered to the customer. That's the best way. And if during that time when it is in the risk of the bank, the customer is possessing it on behalf of the bank, or it is given to the possession of the bank, then with that time, if it destroys or damages, the bank has to bear the loss. But if as an agent bank, the customer is bearing the risk, or he is still possessing it, then we have to see. I mean, it has to be case by case. It has to further determine like on whose risk it was. If it was in his agent's capacity, then mostly he will have to bear the loss. So it is a bit complicated when the customer himself becomes an agent, and that's why in the IOF Sharia standard also it is mentioned that only when we don't find agent, bank cannot be an agent. Bank cannot do it themselves, or he cannot find another agent. This is where it would make the customer as an agent. But making customer as an agent is not the most ideal scenario. Jazakallah khairan. Next question, Assalamu alaikum Sheikh. Referring to the subject matter of the contract, what is Sheikh's opinion on cryptocurrency? How does Sharia treat this subject matter? Is it same as fiat money? It's a good question. Cryptocurrency is a hot topic today, and I think it's a long topic. But just to summarize it, cryptocurrency, if we consider it as a currency, then to exchange it or pay something with it or pay for a service, it's a different thing. Usually no issue, no Sharia issue. But if we consider this as a commodity, then we have to see what is the value inside it. And currency and commodity both cannot come at the same time. In Sharia, the maqasid of Sharia, I mean, is to keep currency as currency. If we look at why riba al-fazl was, for example, prohibited, why Rasulullah sallallahu alaihi wasallam mentioned 6 items specifically: tamar, meaning dates, then sha'ir, then salt, milk, then also gold and silver, because those items were considered price or currency when there was a barter economy. So Sharia has prohibited those so that the currency doesn't become commodity. Currency becomes a mere exchange of, I mean, a medium of exchange and store of value. It doesn't itself becomes a commodity. When it becomes a commodity, then we have rooms for speculation, excessive speculation, timar, and all those things happen. Now, cryptocurrency shouldn't be a tool for investment. And you have definitely pointed out, like when we make it an investment vehicle, this is where we have to see, is it valuable? What is the underlying asset? And still, if both parties consider it as a valuable, still the transaction would be valid. But the speculation part and the conflict with making it currency still remains. Jazakallah khairan. If there is no penalty for late payment, what if the user take unwanted benefit of this clause? Yes, you are right, Mr. Ahsanul Alam. And because of that, the scholars have proposed a solution Of course, it's not the 100% solution. There are multiple things they have mentioned. For example, to find other ways, not to I mean, for stopping him to make default, to be defaulter. Like we have seen in that this, I mean, what is the objective of penalty? The objective of penalty is not to make him default, but in practice this doesn't always work. The person is still defaults. So rather we have to find a mechanism which stops him from defaulting, especially if he is a if he is solvent, is not insolvent. Of course, if he is not in, if he is insolvent and it is proved, if he is bankrupt, for example, then there is guidance in Al Quran that for naziratun ila maisara, to give him some space, some time until he is solvent. But if he is not insolvent, he is solvent, but still he's making default. In that case, there should be a mechanism to blacklist him, to stop him from getting further funding from other financial institutions. In other words, to pressurize him to enforce some other regulatory matters. However, if we still find that there is no other way but to take monetary penalty, Sharia scholars have suggested we can take an undertaking to charity, meaning that the person would undertake, okay, if I make a default, if I make a late payment, I undertake to make certain amount charity to the charity department of the bank, or maybe to some charity that the bank has instructed for. That is still fine and better than agreeing on a penalty clause. Because when we agree to pay a penalty, it's just agreeing to a riba. So when I undertake as a charity, it's not penalty, it's not agreeing to riba, but the fundamental thing that we wanted is to impose some monetary penalty that is still there. So that could be fine. Jazakumullah. Can I buy a vehicle along with bank by paying 40% of the cost from my side and 60% from the bank side, and then buy the bank's part via Murabaha contract? So this is basically diminishing musharaka, whereby two parties jointly own a commodity or an asset, then one party basically gradually purchase another party's share. But what you have asked is basically one party is purchasing the remainder share as a murabaha. I think this we need to look at carefully. In general, it shouldn't conclude a buyback, right? If in general it doesn't seem to be a buyback. Hopefully it would be fine, but I'm not giving a definite answer at this moment. I have to further check it. Maybe you can share with us and we can see, inshallah. Assalamu alaikum. Will you share this recorded webinar? Yes, inshallah, we will share. Last question for today. We have Islamic law of contract, alhamdulillah. However, what are the options for us when we witness a breach of such contracts? Can we go to courts, but some countries doesn't recognize Islamic law? Similarly, should we keep a clause of arbitration? Are there any significant example? Yes, of course, we can have a clause for arbitration and mediation, and we can also go to courts, of course, but we have to remember that if we know that something is being injustice to the other party, knowingly we shouldn't approach that, even though we have ways to defend and claim from the other party. This is something that Sharia has not allowed us, or Sharia has not recommended us. But if there is something that we cannot solve ourselves, of course we can go to legal courts. One suggestion I would make is that on top of legal courts, especially in countries where we don't have Sharia courts, or we don't have courts that do not recognize Islamic law, we can go get a third-party opinion from Sharia scholars. There are ifta boards, there are Sharia scholars. We can get an opinion from them based on Quran, Sunnah, and other sources of Sharia, and we can, mutually agree or go to our arbitration based on that. Or if there is no other room, then we can go to the legal court, inshallah. Okay, I think we have answered all the questions that we had in chat. I think there are two things. What is general understanding from trading platforms, stocks, and cryptocurrencies? Are those halal and haram in general? Are there, as there are some uncertainty and ambiguity? Yeah, it's excessive speculation. Whatever is this excessive speculation in terms of purchasing stocks, or cryptocurrencies, or ICOs, or futures and forward trades, option contracts. Those with excessive gharar is prohibited by Sharia. However, if someone purchases stocks as not for excessive speculation, but to take part in the company as a shareholder, then there are certain conditions to fulfill. We have to see the type of business the company is performing. We have to see the revenue sources. If the company has riba based loans, riba based debts, there are some certain conditions we can find in IOF Sharia standard on Musharaka. We can also find in other international Sharia indices. They also provide their methodology. We can get those inshallah there. We will try to discuss those principles in brief in the next session, inshallah, where we discuss the equity contracts. Okay, Sheikh clearly mentioned earlier that the subsumer should be pork and non-personal. However, about purchasing stock, there are categories as Sharia compliant but have Sharia compliant element to the percentage. Is it permissible? Okay, the question is, I mentioned that there shouldn't be Sharia prohibited items in the contract, but let's say we want to purchase a share of the company or a stock of the company, and the company in principle has halal product, but it also has some prohibited products. All right, some source of some revenue, some income from prohibited sources. How should we deal with those? So inshallah, as I mentioned, things that are related to stocks and shares of the company, inshallah, we will detail and discuss in the next session, because in the next session, inshallah, we will discuss about equity contracts. So with that, we will finish the session today. Thank you so much for attending. Please keep attending the next session as well. We will share the slides and videos. Please share among your friends, families, and all the known people around you. Let's raise the awareness about Islamic finance in general, inshallah, because without making ourselves aware, we cannot make or do or implement true Islamic finance. I know there is a high criticism of is Islamic finance really Islamic, for example, right? There are criticisms around the globe. But the first step before we even get into that debate is that we have to make ourselves aware. All the stakeholders of Islamic finance, the customers, the bank, the people who are working in the banks and financial institutions, the regulators, the legal courts, and everyone, all the stakeholders, we have to make ourselves more and more aware about Islamic finance. This is the only way to make Islamic finance truly Islamic. So with that, inshallah, I finish the session today. Jazakumullah khairan again. Thank you so much. Assalamu alaikum wa rahmatullahi wa barakatuh.